Oh, man. This thing is working now. Look at that, man. Looks like something in the background there. Hey, welcome to the closing beat, everybody. Happy Monday. Just the one happy today. Hope you're having a good day out there, and thanks for joining us here. We are financial advisors here at Jazz Wealth, and we're going to talk about the stock market. Going to do a little bit of talking about that. First of all, Mattress Mac, huh? Can you hear Cody over there? Can I hear you?
You got me.
Ooh, nice and quiet. Mattress Mac, man, winning $75 million. You know I got to talk about that.
That's pretty sweet. Yeah.
$75 million, man. He gets, well, it's $10 million in various places. Did you read about it?
No, I didn't dive into it. I don't know exactly what he did, but I know he made a killing.
So he doesn't get $75 million from one place, but it's kind of interesting, and it does pertain to a stock here. So he bet $3 million early in the season on the Astros at Caesar's Palace, 10-1. Means they'd have to pay him $30 million, right? And they put $1 million at WinBet, and they put $2 million at BetMGM, 5-1 on that one. $2 million at Barstool, 5.3-1, and $1 million at Unibet and Betfred. So the deal was, you know the deal, right? So he bet that if he won, that customers, they could, if they spent $3,000 at his store, they could come back and get a refund for the $3,000, but they could keep their stuff. So I bet there's a lot of people looking forward to that. I find it fascinating because Caesars has already mentioned what this payout's going to do to them. He single-handedly is going to make them have an unprofitable quarter. So that'd be, so we could go over here real quick. Caesars, they were up today, I think, but so because they got to pay him $30 million, man, they're not going to have a profitable quarter. Now we already knew that, right? So that's probably why the stock's not taking too much of a beating today. But go Mattress Mac, man. Good for him. Did you bet on the game?
No, I did not.
No betting on the game. What fun is that, man?
Yeah, I didn't watch enough of it. There wasn't a lot of excitement on this one.
Man, he stole the show, man. Like that was, you know, it's great that the Astros won, but like that was all him. That's all people were talking about. Anyways, we also got to talk about the stock market here today. Congratulations, Mattress Mac. And to anybody that bought from his store. I didn't catch the name of his store, but I know he's been doing things like this for a while. Anyways, we go over to the markets here today. You got the S&P. Let's take a look. Let's just pop on over here to the chart so you can see. We'll load it on up. You got the S&P trying to recover here just a little bit. Friday, what happened? You get unemployment rates. So unemployment rate ticks higher, stock market goes higher, right? So that kind of leads into and continues our conversation about bad news is good news for the stock market, not good for the economy, but good for the stock market because it means, hey, the Fed's going to do what they got to do. This is why you have to disconnect from what you see on TV, which is not false, but this is why you have to disconnect from that as it pertains to market performance, because bad news means good news for the stock market. It means the Fed can start slowing things down, hopefully, and inflation's getting under control and everything there. But don't go anywhere, because Thursday we get CPI numbers, right? We got a busy week. We got the midterms coming up. I'll talk about that in a second. We got CPI numbers coming out Thursday. 8% is the estimate. I say we break it. I think there's going to be a 7 in front of that. That's a long shot, right? That's a real long shot bet. What happened to the color, man? The color's coming at me like it's trying to ruin me. Let's go like that. Maybe take some of it out. I don't know. It's pink. Anyways, so a big week coming up here. Funny thing, and I'll just share this with you here real quick. Let me go over to the slides I've got. I'll show you this. This is our Notes from Jazz email. I publish it every week. I hand type it. It's not like one of those industry things where they, just put a bunch of random information. I actually shared, you can go back in and read it if you want. I kind of highlighted every single thing. Did you know that a reporter for the Associated Press single-handedly caused the stock market to fall? Like, that, and minute by minute, I highlighted it to show. He asked a question to Jerome Powell. He had the wrong information when he asked that question. Jerome Powell didn't know it and responded more aggressively because he was trying to get the markets to go down. So it was really fascinating to get to see how that all played out, because one dude, and on Twitter, he was like, sorry, guys, I'll try next time to get better data there. I'm sorry, man. Yeah, I'm getting pinker by the second. This is like Willy Wonka over here, man. You do what you got to do, man. It's like I went out and got a tan. I got a haircut, in case you're wondering, but You know, nobody seems to notice. Maybe moisturize too. Throw that one out there for Swamp Rat. Anyways, let's talk about the markets here today. So the S&P, a little bit of a rally. Let's talk about where everything was going here today. Energy. Speaking of single-handedly here, Biden single-handedly caused the energy market to, or the energy sector to rally today because over the weekend he said, no more drilling. We're not doing it. No more drilling. Why would that cause the energy sector to go higher? You would think it would have it go lower. The reason is because we already know that they're buying back shares and they're paying out higher dividends. They're doing this because they're like, you say we can't drill, what do you want us to do? So what's happening here is more of that's to be expected. Well, which stocks go higher? Remember the lesson that we talked about a week and a half ago? We said stocks that are buying back shares are outperforming, and they historically outperform in recessions, no recessions, a surge of the whole thing there. So people aren't stupid, right? They're like, okay, that's where I need to be. So thanks, Biden. He helped us out there. Energy continuing with its rally there. I do want to point out some really cool things here. You've got communication services. So communication services was the best performing sector here today, and that's because of Meta, right? So Meta is the largest holding there. We'll cover some of that in a second. There's Meta getting yourself about a 6.5% rally on the day there. And remember that Meta, it's the largest holding in the XLC. It's like 13%, somewhere in there. So that stock has a good day, very likely that the sector is going to have a good day. If you add in the two classes of Google shares, then you got yourself 30% of the XLC. What did Alphabet do here today? Both classes of shares had a great day, so that's that one there. Tech comes in third place here today. 1.6% gain there. That was really Microsoft and the semis. So remember, we talked about this last week. The stock market cannot bounce until these oversold big stocks, your Microsoft, so everything we talked about, Alphabet and stuff, Meta, start having these rallies. What happened today? They're responsible for it, right? Healthcare had a good day and things, but they're responsible for that. So it's really, really cool to see. Anyways, looking further, speaking of healthcare, healthcare came in fourth place. This is strong and getting stronger, I will point out there. It's looking like no blue wave in the midterm elections, like it or not. That's just where it stands. And that's good for healthcare because that means that people are going to look over here, right? If the Democrats had full control, healthcare would be prime, front and center. That'd be bad for the healthcare sector. Because it's looking like that's not going to be the case, it looks like the all clear for them at the moment. A lot of people ask about financials. This one is not as affected by the midterms, in case you weren't familiar about that. So their financial regulators that Biden put in place, they're already confirmed. So that's already part of the equation. The pressure that will be put on the financial industry has already been understood. It's not going to change there. And I will say, if Republicans get control of the House and the Senate and create that division, then that's actually good news for the smaller banks. That's where you'd want to look, because the smaller banks have said, we're on a path to try to merge, right? We want to compete with the big banks, so we're going to merge and try to put all this together. Well, if we already know that the financial regulators in place don't have such a big, problem with that, then that gives them the green light to do that. If there was a full Democratic control, that'd be a little bit more of a problem because we could add more regulators there. So that's a little bit about what's going on there. Now, some of the stocks, if we take a look, some of the stocks that were in the news here today that, of course, were affecting the stock market. Apple. So this is an oversold stock as well. Big weighting in the S&P, right? One of the biggest. So Apple says, man, these shutdowns in China are really starting to get frustrating. It's hurting our iPhone production, particularly the iPhone 14. The Pro, what do they call it? iPhone Pro Max or something like that. Same thing there. So they came out with that. That really didn't do much for the stock, not really supposed to do anything there. But what are they doing? Well, why would they even bother to say that? That's one way of, hey, Wall Street, lower your expectations. We're not saying it, but we're saying China's a bit of a problem. Go ahead and lower your expectations. So that's good news for the stock when you look at it. Isn't it kind of weird how stocks move, right? Sometimes bad news moves a stock higher. If you dig just one layer deeper, you can figure it out. Apple gave the Wall Street the warning here today and helps things move higher. Energy moved higher because Biden said no more new drilling, but that means the energy companies are going to keep doing what they're doing, which has gone really well for stock prices. So read through just a little bit more and you'll get to the bottom of some of what's going on here. I want to point out Meta. They fell victim to Wall Street here. So I spent the weekend just learning anything and everything about the metaverse, down to the ocular resolution that your eyeballs can actually see and how it's actually working, and what the difference between the different platforms that they have is, and why are we really doing this. And all of a sudden they come out today and they're like, we may have to be a little bit smaller. We're still going to go after this metaverse thing, but we may have to do this a little bit more nimbly than we currently are. Nimbly, I believe, is still a word. Tesla in the news there. Barron said that this is going to be a problem with Elon Musk going and hanging out at Twitter all the time. That's going to impact Tesla. There's actually a lawsuit against Elon Musk at the moment, because they're saying, hey, your efforts are over here. We shouldn't have to pay you the 65 billion or something like that, because you're not going to be around as much, and we don't like that. So that was in the news there. MetLife, this is a healthcare stock that has been doing quite well, actually. It's an insurance company, but they're doing quite well here. And it was in the Barron's over the weekend. They said rising rates and a strong job market, it's a good thing for them. They think this stock's going to be moving a little bit higher. There's a lot more to that story, but if you want to read it, you know where you're going. And what is it, Plantair? Yeah, there they are. So rough day for them, down 11% there. They lowered the guidance going forward. It was a bit of an earnings miss there. They made a penny, but still, guidance going forward, not good. All the tech companies, you know, they've been going through that. That's nothing new there. Hey, by the way, even since I look like the color of wine right now in this, whatever's going on here, in our wine and wealth class last week, you know the Augusta rule? Everybody's talking about that. Well, we went through the details, and we actually gave clients, and have that here for clients, the actual process that you need to follow, both as the employer and as the vendor that you're going to be there. So we went through the details so that if you choose to do that, you won't get in trouble with the IRS. You'll follow those steps perfectly clear. So be sure to check that out if you're one of our clients and you want to do that there. Okay, let's do a little something special here. So Powerball, right? They got the Powerball, 1.9 billion, or maybe 2 billion by the time it's all said and done there. Powerball, you know, maybe some of these guys want to buy the Powerball. Here is the current $1 trillion, well, what was the $1 trillion club? I thought we'd be fun here to take a look at this. So what we're showing is Apple, Microsoft, Alphabet, Amazon, and Tesla. At the peak of their stock price, Apple was worth $2.9 trillion. Still a respectable 2.1, but in black, you're seeing where they currently stand. Microsoft, 2.5 trillion, now sitting at 1.6. Alphabet, Amazon, and Tesla losing their $1 trillion status here today. Alphabet technically is right on the cusp there because of today, but other than that, these guys fading back quite a bit here. Now, what's interesting is if you were to total up at the peak there, right? Just total up the peak, they were at $11 trillion, right? 11.7. And the S&P, let's go over here one more. There it is, 11.7 trillion. The S&P was sitting at 42.3 trillion. Remember that there's only a handful of stocks that can move the market. 11 trillion into 42 million, or 42 trillion, right? That's a quarter, right? So basic math can't do it there real quick. That's a quarter. Just these 6 stocks make up 1/4 of all that. Now, currently, they're sitting at $6.7 trillion, and the S&P is sitting at $32.8 trillion. What's interesting about that? So we've got 5 trillion lost between those 6, or 46% of their value lost between those 6 stocks. But is the stock market down 46%? No. The S&P lost 9 trillion, but that's only 21% there. So the world revolves around these stocks. However, you notice how it's not as painful market cap-wise on the downside there? It's a rough go of it. I'm just going to suggest that one of them goes out, you know, maybe plays the Powerball. It won't help, right? We're only talking 2 billion versus the trillions that have been lost, but really gives you an idea of how nasty this pullback has been for a select few. Some that were smaller have lost more on a percentage basis, but when we're talking these big dollars like that, that to me is incredible. Now, I got a tip for you. We'll call it your Doe Straight tip of the day. And I don't know what just happened here. I lost my screensaver went on. Your Doe Straight tip of the day. You ready for it? So If you're doing conversions, this is the advisor talking here. If you're going to do a Roth conversion in 2022, it has to happen in 2022. So many people think, oh, I have until tax day. Well, you have until tax day to put dollars in. But if you go and in 2023, let's say in January, you put $6,000 into an IRA and you go to convert it to a Roth, that counts for 2023, not 2022. So you want to do those Roth conversions in this calendar year if you want them to count. Please keep in mind that it counts as ordinary income. If you convert a lot of money, you may phase yourself out of being anywhere eligible to contribute to a Roth. You may hurt yourself when it comes to Social Security and the tax you pay on that. Medicare, right? Think about these things before you do a conversion. And most importantly, if you're going to do it, the clock is ticking because, you have until the end of the year. That's your tip of the day. Lastly, I'll move on here. Let's get this over with. We got to talk about the elections, right? Because they're going to move the markets. I've shared little pieces along the way to show you how the markets like division. As your personal individual self, you may prefer one side to win over the other, or you may have some political beliefs and agendas, and that's all great. But the stock market, well, it has its own belief. It likes when Congress is divided. So how's that going right now? These are the current betting odds. This is not my data. This is the current betting odds of the actual the elections that are coming up tomorrow anyways. Right now, the odds favor the GOP to take back both the House and take the Senate as well. 89.5% chance, that'll be down here, to win the House, and a 69.2% chance to win the Senate. So we got a slight favor there. There's some close races in Nevada, Arizona, Georgia, Pennsylvania, and New Hampshire is still up here favoring the Democrats there just a little bit. If this holds, you'd give the Republicans 53 seats in the Senate versus 47 for the Democrats. We don't quite know, obviously, what's going to happen, and we likely won't know the results by tomorrow there, right? But what I do know is that in the last 70 years, regardless of who wins, right? We've shared the details with you of like the percentages and gains and losses and all that. But in the last 70 years, the S&P has always been positive 12 months later. It's a 100% success rate, and you don't get to say that often in the stock market. So last 70 years, the S&P has been higher 12 months after the midterm election day, which is tomorrow. Most of those gains, by the way, came in the 3 to 6 month window. So even though 12 months later we were higher, the bulk of the returns came in the 3 to 6 month window. So there's something for you to look forward to, right? I mean, you got a lot, probably you guys are getting bombarded with commercials every single minute with all these, races going on and everything. But the good news is the market tends to be higher. So we can see what happens going forward. We'll be here, and we'll definitely cover it. I'll take your questions now. If you have any, we'll see what we can do here question-wise, and then we'll fix all of this so I don't look like I got a sunburnt over the weekend there. Yeah. And by the way, yes, the $1 trillion numbers I was sharing with you, that was as of, last night, putting it together, right? So today, a little bit different there. Thankfully, some of those got a rally there. Yeah. Hey, Dustin, when I win the Powerball, expect to hear from me. You're going to want to become a client real fast. Yeah. We have had clients who won the lottery, not the Powerball. We do have a client who won their state's lottery. And, there was a good chunk of money there. And they were young, too. So they came to us because they won the lottery and they were a little bit curious as to what to do. So that happens. We've got that. Interesting things. We've had people that have come into massive sums of money that were not otherwise expecting it. And we've had sports players, right? So sports players that are now making lots of money, not the money you see on TV, but, playing for the NFL and such. But yeah, happy to help. There's a lot of little things you can do there, especially with that kind of money. There's a lot of decisions you can make that, you believe it or not, can take that money away from you real quick. So I hope you win, but selfishly, I hope I win. I don't have tickets or anything, but maybe I'll get some on the way home. Is the car working? Oh, the truck over there? Yep, that works. That's I call it the daily driver. It needs a new rear end, so it's a little rough to drive right now, but yeah, I love driving that thing. It's got air condition. It's got all the fixings, man. Is there a small bank ETF? That would be the KBE. Well, it's the most popular one. It is not the only one, by the way, so don't take this as a recommendation. But if you look at the, oh, I typed it wrong. If you look at the KBE, that is going to be your regional bank ETF. Might be the ones that you want to kind of look at there. What's happening there? Yeah. Yeah. Well, thank you. Thank you. Thank you. Yeah, I'll get it fixed at some point. It's just a little raw, but other than that, runs just fine. Right? It's an 80-year-old truck, man. What 80-year-old doesn't make a little noise here and there? You know what I mean? The KRE, sorry, yes, the KRE. That's your regional bank. I said KBE. I'm sorry. Ashish got it right there. Regional banks or small banks are going to be the KRE. That's the most popular one there. When do you think is a good time to buy growth stocks? That's a tough one, right? Right now, the focus and the money right now is in the dividend growth stocks, right? So dividend stocks that consistently grow their dividends, not dividend stocks that are growth companies, right? Hopefully that's clear. But that's a tough one. I don't have a clear answer on that one. I think if you are one that likes to buy in pieces, you got to nibble, don't you? Right? Some of these beatdowns on some of these growth stocks have been so crazy. Yeah. Weekly question on Macau. Win like the news this week? What's your question on Macau, though? What do you think there? It's a big money center for these guys, man. So that's where that thing gets shut down, COVID or something, which they haven't done a whole lot, I guess, but as much as some of the other areas you hear about, I don't know why it's, I don't know why the other areas are so popular, actually. What do you think about China stocks? It's tough to pick on them right now. I don't blame you for wanting to, but I don't have any good direction there. Yeah. You said nibble in May or out of nibble on tech stocks? Nah, I think you got to nibble in the market for sure. Tech stocks may be a different story there. Slightly different story, right? And if you nibbled in May, you're at the exact same spot you are now anyways. Like if you, seriously, if you bought in the middle of May, I guess depending on the day, because there was a lot of volatility there, but if you bought in the middle of May, after today, it's like you did nothing. It's not up, it's not down, it's just right there, man. So no nibbling for you then. What do you think about student loan forgiveness? Doesn't really matter what I think. I see they're fighting about it there. I don't think it's really right, but for those of you, if you're gonna get it, take advantage of it. You know, on one hand, you're gonna have people that are like, "This is stupid." On the other hand, you're like, why not take the money? Might as well take it. Think that's not probably something we should be doing, no. Yeah, there you go. You think it's going to be volatile for the next couple of years? That'd be cool. As long as it's not always down. Is it possible or even sensible to pool money to buy stocks? Pool, what do you mean? Like form a group or something? Form like a group in with your friends or something? Is that what you're asking? Why you would say pooling money? I don't know why I'm red, man. I'm not red in real life. It's just everything's red today, man. I don't know. Yeah, form a group. Well, there's a million things you want to consider there. And also, are you allowed to? It's you can do a trading group. You know, you could say, me and my friends from the neighborhood want to start a trading group. You can open accounts like that. But it gets a little bit, well, no, it really gets hairy when you decide, I'm going to be the investor and I'm going to ask people to give me money. Well, I'm not doing it for free, so I hope to make a few dollars off of the returns. That you have to be extremely careful with. That is not impossible, but they basically make it. Yeah, they basically make it. I would say a trading group where you guys essentially just all share an account is probably something you can work out. Investment club. Yeah, they used to call them investment clubs. It's popular down here. They do them. They used to do them a lot in nursing homes and things. So it was popular in this area. Yeah. Yep. Just be careful with the rules there. So I'm not that one specifically today. I am not giving specific advice. Okay, I'll wrap it up there, get myself cleaned up and colored up the right way. We'll be back tomorrow to do this all over again. You have a great rest of your day, and thanks for hanging out with us, man. Adios.